Good evening. This is the Eye of the Storm podcast for the NASDAQ 100 for Monday, May 30th, 2022. I have chosen to do a little bit elongated update today as I look at the longer term charts. I want to update those. I want to update my count that I have thus far. And I also want to update the last basically 3 days of very solid, but at least Thursday and Friday, of the total absence of sellers in the market and these intense moves, and try to put them into perspective the way that I'm viewing them. And again, so I'm going to start here actually on the weekly chart. And on the weekly chart, we have now, come down three times, again, attesting this weekly 200 moving average, which right now is sitting at 11,688. And so it's gotten back to the area where it was at on May 9th, when we came down and tested it there at 11,689. Excuse me. So where I've made some adjustments here on this count is that initial low at 11,689 completed minor wave 3, as you can see here. Then we had a minor fourth wave, which completed just below 12,700. Then we dropped in the minor fifth wave, and that took us down to 11,491. So that was the break below that weekly 200, excuse me, which then was regained and pushed much further higher, clean higher, to recover that 200 and to then produce the rallies that we saw that took us all the way up to that 12,800 level over the weekend, and actually Friday, and then again today during the opening of Globex. Now, what could all this be? Well, I've marked it down as that 11,491 being the completion point for wave 3. Let me bring it back down to the daily chart, and we can take a little bit of a look at this here. Pull this in a little bit. So here we have 11,491 as being the end from minor 5 and then the intermediate third. So everything in between now, from that point till now, has been an intermediate fourth wave. So I know this has been shifting around from a minute 4 to a minor 4 to now an intermediate 4. What it can't be is a primary 4, because we certainly have not gone that far into it. So, but this keeps the premise that the market still has an additional drop in the terms of the intermediate fifth wave to come in before we actually do put in that low for primary wave A. So again, here I'm looking for that versus what I'm going to now present, because I still believe we still have the best way I can count it. I still believe we still have one more down, even to put in, and again, I'm thinking still sub 10,000. So if this is an intermediate fifth wave, it's going to be pretty big. This was the third. The third just barely put in over the intermediate wave 1. Now we need to put this in. If I bring this over and put it on a closing basis, so that's what the line chart is. Line charts are closing. There's the bottom of wave 1, 13,078. Well, if I leave it on just candle basis, which shows the extremes, we had a low at 12,942. Well, this has gotten up to 12,883. So we're within 60 points of invalidating this being an intermediate third wave. Now, if that comes through, then because I can count 5 waves of minor degree, I'm now going to tell you what the alternate would be. And the alternate would be that we shift this to an A, intermediate B, intermediate C. Primary wave A completes at 11,491. And we're in the beginning stages of a primary degree B wave rally. Now, that gives a lot more steam to this rally continuing. That gives a lot more basis for this market to get above 15,262, 16,000, and start heading up towards these upper levels. Can it get up to new all-time highs? Let me get back out to that weekly chart. As a counter trend rally, a counter trend corrective rally, yes, it can get up above 16,767, 68. It can, and do it in 3 waves. If this gets marked, intermediate A, intermediate B, intermediate C for primary wave A, primary wave B would have the potential to go in and up. Now, being that this ABC as a 3 waves produces another 3 here, but makes it very much as likely that it will be a flat B wave, so in a flat type of a correction. And why? Well, because the B wave is going to be an ABC and likely will come in as a flat as it gets close to that high. Now, here's the caveat. As a B wave, it can move to a new all-time high. And if that's the case, I'm just going to drop this Fibonacci, which is for an intermediate 3rd wave, and put up, I actually need to take these down because that's kind of telling me the B wave on the way up, but you can see it doesn't quite get all the way. And actually, but gets close. So I'll leave it up because what I'd be looking for is from here is for the B wave to come in at 1.236 to 1.382 times the length of the A wave, and that would be the A wave. So it can, this case, it's not going to because the high is at 16,767, but it get dang close and likely could pop one more and get itself up to this 1.618, which is 17,606. So that's under that scenario. Now, as I said in my update for the S&P, and I'm not going to go in greater detail, even though while I'm working a count, in other words, when I'm laying it out, which is going into the future and laying out a potentially explosive rally, normally Elliott Wave has no indication and makes no claim that a news event or a fundamental change news event or a war or a pandemic or any of the things that have caused huge moves in our market as knowing that that's what's coming. What the Elliott Wave tells us, it gives us the possibilities and the potential for the following moves. If this is the count, if these are intermediate A, B, C, and we're looking for a primary B wave, yes, it's going to be a kick-ass rally and it's going to move and it's not going to stop. But what follows after all of that is a tremendously destructive C wave down, and that will destroy the market, bring us down to here and maybe then some. Now, having said all that, what could propel the market to go up like that? I have no idea. Elliott Wave does not suggest, well, this is going to happen or that's going to happen, because it doesn't take news or economic factors into the calculation of either Fibonacci or the waves. So based on that, the market will decide. Can the market go up that much and create new all-time highs on negative news? Yeah, it can. And the last example that we had of that was the Dow. in 2008, 2009. The Dow all by itself went up to new all-time highs. The S&P got close, the NASDAQ not even, but the Dow single-handedly made new all-time highs and then proceeded to drop as the financial collapse, the economic collapse of 2009 kicked in and took over. So could we get another one of those? We sure could. And this one could be the NASDAQ, or it can be the S&P, or it can be all three or all four. They all do it. But what's it going to push it up there? Your guess is as good as mine. I get a ton of reasons from people that leave me comments about what's going to cause the market to go up. Now, I think it's got to be something more substantial than what a lot of the comments that I get. Not that those comments are bad or not that they're wrong. Markets do and will go up based on that. But it can't stand alone be the reason why the market would move to a new high. So we got to have something more substantial. We already have a whole bunch of givens that really point to a price restructuring, a repricing time. Again, inflation is not under control. We're not getting any news that shows us that the higher rates are beginning to work, that things are now dropping in a little bit closer. Things are starting to tighten up a little bit closer. You know, whatever the situation is, we don't know yet. So to ride on that one, I think would be false hope. So what about the war? What about the fact that China's not really liking what we're trying to do over there and where we're sticking our nose in? So we still got a lot of stuff going on. There's a lot of reasons not to go in that. So maybe a B wave, if that's what it's going to be, goes up on pure hope, pure prayer, pure whims, pure whatever. But to consider that everything's going to turn around, that's really what would happen, I don't necessarily see that. But I want to tell you, it does not mean that the market can't turn and go up in that direction. And it does not mean that I will sit with a losing position and let it happen. My point is like, I was an options market maker. I did carry positions, large positions over longer periods of time that demanded a lot of adjustments and a lot of management. That was part of being a market maker. Now, I chose not to have to deal with that on a daily basis anymore because the volatility was now getting a lot crazier, and the electronic trading and the high frequency trading firms were coming in and clocking a lot of us because they're able to grab the trades a lot quicker than we can. So while adjustments have been made, and option traders can certainly make a great deal of money trading and using premium, et cetera, I chose to just not, and I went and became a day trader in the futures market. I do not carry overnight positions in the futures. I get to go home, I'm flat, I'll come back in tomorrow. I trade price action. I trade what the market is telling me it's going to do. I trade technically, so my pictures are technical and my indicators are also technical. And the primary ones that I'm using are Fibonacci, Elliott, moving averages. And on my lower timeframes, I include on my day trading, the order flow. I monitor order flow. I also look at points of control, value areas, where the value area high, value area low, previous value areas, previous points of control, unchallenged points of control, naked points of control. Many, many different factors go into what a market will do during a structured period of time, like an hourly, a 30-minute, a 15-minute, a 5, a 2, et cetera. Excuse me. So I like not being bullish. I like not being bearish. So people say, well, how can you do Elliott wave? It's like, I'm trying to present both sides of each coin each time I make an update. Here's if the market's going to move up. Here's what we can expect. This is what it needs to show us. Then we know, and you jump on, you take advantage of it. And again, if it's going to go down, this is what I expect. This is what I'm going to be looking for. And when I see that, I will trade accordingly. So again, technical. Now, on the weekly chart, if this is intermediate wave 3, intermediate wave 4 is coming to an end, it's pulling in to stop here. And I think it's going to have to come in pretty close because you see, it really can't go above, what did I say? 13,303. That's on a closing basis. So because of the chart, because of the higher, the higher, what's the word? The volatility in terms of the velocity is producing tails that, and these are the extremes that a market, you know, this extreme is here, but the market, the bar closed here. This was an extreme, the bar closed here. So we see them on a candle basis, but when I'm looking at Elliott and I'm following it under the terms that RN Elliott produced for us, RN Elliott's charts were on a close basis. So each hour he made a mark. This is where the market or the Dow Jones or the S&P closed at that hour. And then that got a dot, and then you connected all of them, and then you got your charts. Well, now it's done electronically, and we have candlestick charts which show the extremes that the market did within that week in this case. And then we just go down within the hour, within the 30 minutes, within the 5 minutes. So on a closing basis, we have much more room for this market to move up, because here it got up to 883, like I said. Now that's going to kill it. And then we can turn and the market continues to go down. Then I can be looking, okay, I can put in intermediate 4 here, but intermediate 5 needs to pick up and get going, lickety split. In other words, that 5 is going to kick in this 4, and it's just going to, now I'm on the daily chart. So it cannot get up to the 50. That negates intermediate 3 being here, and this is an intermediate 4. So if anything, because I can count 5 down on a minor basis, minor degree, this could be intermediate A, intermediate B, intermediate C of primary A, could be. This has room to be rearranged yet again. There are several interpretations of the drop down. And so we still, but what really needs to happen for either scenario, if the market is intending to adhere, we cannot go above those levels before we're forced to shift to a different labeling. And that different labeling could continue to show us that we're going to drop, but more than likely is going to show us that the upside will continue. But if we go from here and we start to drop, and then I'm going to be more in tune if it begins, first of all, dropping down, breaking below the 20 and the 4, and then below support at 12,385, then below the 8, and everything starts to turn lower. And we start to head again for 11,491. Now, if we go up and we break above 13,304, that's going to negate this. And then we're into the ABC. And if that's the case, these still are in, but they're just going to turn it into a B wave. Then, if the market is going to continue to move higher, it needs to, number one, break above 12,900, 940 to be exact. And that's just Fibonacci 382 as a retracement of the decline from the highs of 15,272, and I believe it's 68, down to that 11,491. That's wave A. We're not going to trace out a wave B. Expectations would be for this rally to continue, for the rally to break above 12,940, then to break above 13,109, break above the 50, clear it, close above it. Break above 1383, that's only 50%. What's common for a B wave? Well, 50, 618, 13,828, the top of that 618. Now we also, like I said, yes, it could turn into an irregular B wave, which puts the threat at 16,268. And again, we're going to go back out, right, because that's wave 2. I have to go back out to my weekly chart, and that's over here, 16,767. So again, irregular, yeah, it can go to new high or get dang close. Because once we start surpassing 15,272 as a B wave, it really puts it into irregular. And yeah, it's going to get close, and it could push and get itself above, like I said before, to 17,607. So that's a little bit out there in the future. So for right now, my thoughts, we got to see what this is all going to, how this is going to resolve. And we should get that response pretty quick. It shouldn't take all that long for us to get the resolution as to what all of this is going to end up being, what all of this is going to end up being. But for right now, trade what's in front of you. Trade the price action. Let the market resolve all of this, and then we'll be much clearer on where the trades are going to go, what the plans should be made. And again, I am now inviting, I really do appreciate the alternate views that get presented within the comment sections on the videos. And I do apologize because I did get a little bit out of step last week for varied reasons that really were not market related. It was all kind of personal and within my life. And so I apologize for barking a little bit too loud, or maybe giving the impression that it's like, hey, don't question my work, etc. That is all fair. I was out of line. I overreacted, and I apologize for doing that. And I do it publicly now in front of everybody. I welcome those views. I would like to hear from other people that are working Elliott counts as to how they're interpreting and what they're saying. And I imagine that we're going to get some good stuff. So I invite those, and I also invite others to read and to follow along, because the answers are not as always as plain as we think. And so that's why these counts are fluid. And as the market moves, we have to be fluid with them so that we can understand direction, so we can understand depth, parameters, and trade more effectively. So for tomorrow, again, I think I've laid it out, taking a look at these moving averages now. On the daily, we're being held below the 50, and then we have the 200 above that. They remain in line to go down. If this market turned and started to go down again, the 20 would go flat and then start to turn. The 4 and the 8 would stop hooking, and they would go very quickly and start to turn lower. So that would not be a problem. So this is still kind of more lined up for downside versus upside. If I break down and I go down to the hourly chart we see it's hanging on to the 20 on the hourly. If it breaks the 20, it opens the door for the 50, which are still, this is all in alignment to go up versus going down. So it needs to prove that it has intent to continue the upside, or break and show us that we're going to correct a little bit further. So if we break with some follow through below 12,761.62, then we are likely going to be heading down to the 50, which is at 12,568. Then we have support at 12,385. And then we have the 200, the hourly 200 at 12,250, or 245 to 250. Those remain important. A break below there shoves this back into, we're going down in an intermediate fifth wave mode, and we could see sub 11,491 down closer to that 10,000, or even possibly below 10,000 to put in that intermediate fifth wave. So a lot going on, a lot still need to be decided. We're going to let the market do it because that's all we got. So I'm going to wish everybody a really great trading day tomorrow, just to kind of finish up with these moving averages. I apologize. You can see that as you move down, we're already below the 20, the 4 and the 8 and the 4 are already below the 20, and they're flat right now because the market is. But if we come down, we got the 30-minute 50 at 12,729. And then again, the 30-minute 200 all the way down to 12,358. So this is more, a little bit tilting, more like it's going to turn lower. Coming down to the 15-minute chart, we've got them all bunched up here. We got the 200 sitting all by itself at 12,560, 61. And then up here, we got the 50, the 20, the 4, and the 8 all bunched right around 12,775 to 80, 90 actually. So the 15-minute chart, totally in the middle ground. We don't know, we don't care. So here on the 5-minute chart, at least in the NASDAQ, we are hugging and holding. We broke below. Now we come back up. Now we came back down and testing it. And we're retesting it as we sit. Right at the 5-minute 200. A break below the 5-minute 200 opens the door for a retest to 746, opens the door for the lower levels to be realized. We should get our answers tomorrow. Definitely by Wednesday, I would hope. Have a great trading day tomorrow. The next update will be on Tuesday, the 31st.